Hey traders, welcome to Charts and Coffee. Hope everyone's having a great morning. Happy Monday, everybody. Hope everyone's got a little breakaway from the charts. We do have a pretty jam-packed week coming at us, mainly because, let's jump on over there really quickly here. Mainly because here we go, scroll. First week of the month is kind of included, or the first week of the new month is kind of all jam-packed into this week. So as if it isn't enough to have the FOMC on Wednesday, which is also the last trading day of the month, which can be a bit of a lulu, right? Lots of crazy activity around those high open interest, those attention grabbing spots on the options chain. And then we also have ADP non-farm payroll on the 31st, which happens to be a Wednesday, which reminds us then, oh yeah, now we're going into that countdown to non-farm payroll on Friday. So two major events. Now, there is no expectation that the Federal Reserve is going to do anything at all with rates. So from a macroeconomic standpoint, there aren't going to be changes in the actual number. But in terms of any kind of hints that Powell seems fit to give us about where they are on March, will they or won't they cut? And is it ultimately then just going to be pushed out to May? That's where some of the hints might be dropped. And therefore, that's going to be a pretty important meeting because it's going to set up expectations for March. So will, by the way, Friday's non-farm payroll. So we got a lot coming up. We have a lot coming up this week, a lot. End of the month, FOMC, ADP leading into non-farm. And that's not to say those are the only hot zones this week. Oh gosh, far from. We get a bit of a reprieve today, so not a whole heck of a lot going on today. So as I think about Top Tier Outlook, the newsletter that we put out each week, and of course our Sector Secrets Mastery members get that included with their subscription, with their membership. We also have CB Consumer Confidence Number, which is kind of important, but we have JOLTS. Now, normally JOLTS would steal the show for the week, but since JOLTS is in line with FOMC and non-farm, I mean, this is still going to be a pretty important Tuesday release with the JOLTS at 10 a.m. So it's not as if the week starts on Wednesday, although we could argue that would be true. Not a lot of traders are likely going to want to stick their neck out in front of FOMC and end of month. That is going to be a wild one. All right, so that's what's going on. And, when we think about how we structure our week, when we think about what direction are we focused in, what kind of trades could we find, where might the follow through be? One of the things that we did in the Sector Secrets Mastery last week is we got into gold. Now, there's three ways we can get into gold. We can get into gold via GLD ETF, which is going to key off the GC full-size futures contract. Or let's say you want to trade the futures, but you don't necessarily want to commit to the full-size gold futures. You can go with the micro MGC. So those are three really easy liquid ways. And I could add a fourth, because while in the mastery we are long GLD calls, you can also get long GC calls. So options on the futures contract are very, very liquid and good as well. I like the GLD a little bit better in that the liquidity and the choice for a near term expiration, think less cost, more scalable, more friendly to all sorts of account sizes. GLD is going to open just shy of 189. So here we are up in the daily price movement range, which is likely where we'll be in about 25 minutes at the bell. So nice trade there. And why gold? Well, when we're going into a macroeconomically sensitive week, like this one is, and gold's been bouncing off the daily price movement range, right? It's a great timing to look for those opportunities to take advantage of a possible drop in real yield, which is why gold moves, right? And real yields, for those of you that are wondering, Rog, what the heck is a real yield? It's the nominal yield of a bond, oftentimes the shorter end of the yield curve, 1 year, 3 year, minus the rate of inflation. All right, so that is what we've got going on here. As always, best part of our show are your questions. Kicking it off with Christian. KRE, good morning. Good morning. Christian asks, KRE, sure. Regional banks, love it. All right, KRE on the daily and weekly. Weekly is more of a position portfolio, and I know it's not really there right now yet, Christian. Mm. By the way, shout out to Yee. Yee, one of our members in the mastery, having some of the tea this morning. It is really good. It is really good. So, Christian, even better, let me tell you what we do have, and this will give you a pretty good idea of the kind of thing that we do in terms of setups and trades in the mastery. So, on the I know sometimes it feels like a year ago, but 4 days ago, 4 days ago on the 25th, we set up the 51 call at $51.50, if I recall. I believe it was an alert we sent out for 51, I think 55 to buy the 51 calls. Now I mentioned that because this isn't just me speculating about what KRE could do. We actually have some skin in the game. We've already scaled out because on the 25th, you can see there the trade triggered as price traded into that gray zone of support. Hey, look, gang, I'm all for everyone using things like the slow stow, which I teach here in the rooms. And I'm all for people looking at structure dictates strategy. I've been teaching that for forever too. But the next step is the automation, not just of overbought, oversold, or not just of neutral trend or downtrend or uptrend. But the next step is, all right, once I had this information, now I know what I would like to do. Where do I do it? At what point on the chart can I objectively see there's a zone in which I can buy the call or buy the put or get short or get long, a futures contract or the stock or whatever? So that's where we are right now, in that position, still looking for the next target. We've already reached one, what is it, break even, if not T1, and now we're looking for higher and higher. So if you're joining this now, Christian, what I'll tell you is look at the last time we actually did get in and say, oh, okay, I need another opportunity where price sinks down into that gray zone to get long, right? That's the trade we have on right now, KRE. TD asked, do I have any thoughts on KBE? KBE. All right. What I can't recall what KBE is. The S&P BK ETF. All right, so here's a great example. I trade what I trade because I focus on the best liquidity that I can find, but sometimes I'm going to run into things that I'm not super familiar with or it just doesn't ring a bell. So let's take a step back, and I need to take a look not at what KBE is. I mean, obviously we can figure out what that is in terms of the ETF. It's a bank ETF, right? Normally I'm going to think XLF or KRE, but let's go into the holdings because this is going to tell you what this is. So KBE is a lot like KRE, right? And then the next thing I need to look at after holdings, and actually it should be the first thing, is going to be liquidity. Pretty liquid, pretty liquid. So then I'm going to take a peek and say, all right, well, is this comprised in a way that's significantly different than KRE? Is it a high concentration weighted sector? But that's a good look. And anything that I would do in KRE, for the most part, TD, looks like it's something I could do in KBE. All right. But the next step you've got to take there, at least I do, TD, the next step I've got to take is I've got to look at the option chain. So even though there does seem to be a very nice amount of liquidity in it, when you take a look at the option chain, and I haven't yet, but I believe when I have in the past, if the strikes that you're looking at are under 500 open interest, for me and in the Sector Secrets Mastery, not wanting to get into meme stocks, not wanting to get into illiquid names, that can really turn around and bite us in the you-know-what very quickly. That's where maybe the wheels fall off the wagon for me. So definitely check that open interest to make sure it's viable if options are the way you're going to trade that. Okay, next up is Sadiq asks, I'm thinking about only trading at extremes For example, NQ at 3 a.m. for 10 a.m. I don't know what you mean by extremes. Extremes of what, Sadiq? 3 a.m. and 4 a.m. Which time zone? Eastern? Mm, Central? I'm not sure. But so here's the thing. If you can find that you're able to follow, just reading the rest of your comment there, Sadiq, if you're able to find that you can follow your trading plan based on those criteria, go for it, right? I mean, I don't know. That's not what I do. But at the end of the day, we have to optimize to the things that we know we are most susceptible to, right? So I don't necessarily, for example, my issue is we all have one, by the way. Some traders are too aggressive. Some traders are very loosey-goosey on the risk management. Others are too tight in some other trades. I tend to be a little bit more conservative. It would probably help me to be a little bit more aggressive a trader. All of us are going to have all the different qualities a trader has, right? Otherwise, you're not logging in at 9 a.m. to learn how to do this. So you inherently have something, the soul of a trader somewhere. So, but then you got to ask yourself, on all those characteristics, which ones are high, which ones are low. And I'm not a big fan of changing who we are. I don't think that works. I think we go all in on our superpower. I don't think Superman sits around going, "Oh, I can only fly and see through walls, but I can't talk to fish like Aquaman." That's what a lot of traders do. They say, "Oh, I have these great powers, but I can't talk to fish. I don't have an invisible plane, right? I don't have a Batmobile." No, ask yourself what you're good at. And if that's where your strength is going to come in, go for it, right? That's where we all have to realize whatever our superpower is and go all in on that. And just make sure whatever the side effect is of our superpower, and there always is one, whatever that is, we can minimize and still work our superpower to its best advantage. All right. Jan asked, some analysts said after March to June, KRE will go up. Please explain. Jan, don't know, and I don't care what some analyst has to say. I'm already in KRE. The degree to which I absolutely do not care about what someone says on television or what some analyst says cannot be in any way understated. I do not care, right? And how would I know what they're talking about anyways? I'm already in it. I guess maybe that's the best way to answer that question. Jen, I don't follow analysts, and neither should you, right? Unless an analyst can move a market, and some of them can, right? Unless they can move a market to a level that you're already looking at. Please do not listen to people on television thinking that they're the ones that are going to give you trading ideas. That's not how this game works. Although there is a whole, probably hundreds of thousands of grown adults tuning into different television stations or reading certain sites saying, "Oh, well, that person's clearly going to tell me where something is months from now." I don't know where things are going to be months from now. I don't know anybody who does. Unless they step out of a DeLorean with a flux capacitor, right? In which case, then I might have to listen. Okay. Trade what we see, not what we think, right? All right. NVIDIA or SMCI today. Well, let's do a little bit of trade this, not that, right? Those of you know every now and then I'll cut a video. We do that on and off for the past couple of years, trade this, not that. And NVIDIA has a beautiful uptrend. SMCI, not too bad. I would also take a look at the cost of these options. SMCI is, last time I checked, it's very spendy. NVIDIA is too. I would say, if I'm going to choose, if I were to present this to my members in the Sector Secrets Mastery, I would think about not small account. I don't really believe in thinking that way, and not large account. I don't think of believe in thinking that way either. I ask myself what's scalable, and that needs two things. One, it's low cost enough where a small account can buy one or two options, but it's got enough open interest. It has enough liquidity that a large account can buy 10 or 20 options. Once you've reached a list of stocks that have scalability, now it does not matter whether you have a small account or a large account. You're learning how to trade for regardless of how many zeros are in your account balance. So that's where I'm looking at this. I like the long side of NVDA. I don't not like the long side of SMCI, or whatever that is. SMCI. I don't have any skin in the game here. I do pay attention to NVIDIA because of its weighting in semiconductors, but they're both very strong. So if you're long both, enjoy. Just don't be buying at new highs is my take. All right. What do I see on Johnson and Johnson? All right. So Johnson and Johnson, number 2 weighted stock in the healthcare. It is below the 200, which makes it probably not one of my favorite stocks in healthcare. But if I look at the rest of healthcare and we do some relative performance, that's what trade this, not that is, right? If you ever hear that, okay, Rog, what do you mean by that? It's relative performance. Yeah. What is making me think one stock could be better? What are the characteristics? What are the reads and the indicators? What is the structure? So Lilly, Merck, AbbVie, Thermo, Abbott, and Amgen are your strongest looks in healthcare. UNH and Johnson, even though they're number 1 and number 2 in the UNH, are below their 200 or struggling with it right now. So be very careful. XLV as a whole looks pretty good, but kind of going back to that liquidity conversation, XLV is kind of spotty in terms of open interest. Now, buying a dip is a tricky thing. Buying a dip can be a tricky thing. Just all I would say is that's not a bad way to go in terms of previous dips into the 34 EMA wave. Previous dips into the daily price movement range have moved higher. Just remember what's overhead, right? We still have the 200 overhead. We're still in the bearish hemisphere, but it doesn't mean we can't have a bearish hemisphere bounce. Just be a little bit more conservative about paying yourself. I do ultimately think, based on what we see in previous looks, what we see looks like what we saw before. So it looks like there's a good chance you'll get that move into that zone and then go from there. Yeah, Yee, I'm drinking your tea this morning. It is really nice. I know it's a sacrilege. I like drinking tea in a big glass. It is excellent. Mm-hmm. Do a little tea this morning. Yeah, I like to be very transparent. I mean, I know we're doing charts and coffee. Already had my espresso. Moving on to some tea here. All right. Next up is so we've talked about NVIDIA, SMCI, Johnson and Johnson. Good stuff, gang. Good stuff. All right. Composition, OIH, so oil services. And some of the names in there, Halliburton, Schlumberger, look interesting. The more interesting the crude oil market gets, the more interesting for sure heavily weighted stocks in OIH will get. But I'll tell you, OIH is still struggling below the 200. It's really having a hard time getting out of its own way. When I look at individual stocks, to your point, Halliburton would probably be near the top of my list. Schlumberger, it's just behind that because both of those, as of last week, launched through their 200 period. So at least you're in the bullish hemisphere now. So this is the way I would tackle that composition. It's not going to be necessarily a change in what you're focused on. I like what you're focused on a lot. What I would say, it's going to be a change in the time frame you're focusing on. So I would say shorten the time frame to a short-term swing. So we have the daily breaking above some key levels, the 200 namely, and then we can take a look at the 1 hour for some short-term swings. Yeah, for some short-term swings. So 1 to 3 day time horizon versus say 2 to 10 or longer. All right. Next up is, are we out of time? I think we're pretty much out of time. All right. So that's it, gang. A couple folks are asking about predictions. I don't do predictions, gang. I mean, look, do I have a crystal ball in front of me and a funny hat? We don't do predictions. That should never be the question when it comes to trading, predicting, as if anybody knows what's going to happen next. Here's what I'll tell you on the S&P. This can map to SPY and SPX. We are opening above the previous session close. That's going to be bullish hemisphere. We are in a neutral environment. I'm going to be a little bit more moderate to conservative about the zones, but as long as we're trading above basically 49.12 and 3/4, I want to be bullish. And that is going to be the way I'm going to tackle any variation of the S&P today. All right, gang, be good to each other. As always, thanks for your time. I'll see you tomorrow. Same time, same station.